The market struggled today but end in bullish territory. This is D7, kicking off the week with you here on Monday, September 21st, 2015. Some people saying that my audio levels are a bit too low. I've turned them up. Let me know if you can hear me okay. And taking a look here, the Spider's up 0.5%, Diamond's up 0.8%, Nasdaq up 0.3%, with small caps down 0.16%. I guess Hillary Clinton came out saying something about price gouging from the pharma groups, and that hurt many stocks today. Very interesting what a simple tweet will do and the power that certain people have. And we have the banks up 1.31%. So the banks doing very well. Financials supporting that, up 1.15%, showing strength into today's market. We have silver up a fraction, gold down 0.62%, and crude oil up nearly 3%. US dollar up 0.42%, and the VIX down 6.6%. Here we are looking at the S&P 500 ETF, the Spider, per usual. And we have this chart, and today, this is what has happened. A whole lot of nothing. We have a lower high, a higher low, and we broke even for the day. I mean, technically, the only reason that we have, that the S&P was up 0.5% is just because it gapped up over the weekend. So we had to gap up. We showed a lot of strength, but people sold into the strength yet again. We come right back down, and then we try to rally it back by day's end. And we're stuck now just above the 20-day moving average, but below the EMA that I use here. Last couple sessions, you'll notice we had these big upper shadows, and then big upper shadow on Friday. This was Thursday and Friday. Big up people on Thursday and Friday selling into strength. Today was a lot of the same. Started off very bullish, but we come back down. So today happened on little volume. Let's take a look here at the Nasdaq. Nasdaq went up, toying with this resistance area, come back down, and you have yourself kind of a spinning top, but it's in this sideways consolidation, so there's really not a lot going on here. This is nothing to talk about. Banks, though, now this is something that's noteworthy. Today, when everybody else is virtually break even, today this gapped up with the markets but kept its strength. We did not see sellers come into that strength. Very interesting to see. But yet we're just above the 20-day moving average and below this EMA. So far as its location is concerned, there's a lot of continuity between where the levels are on the banks compared to the S&P. And a quick look here at silver. Silver, we had some selling on Friday. We just break even, lower high, higher low, just an inside trading day. Gold drop. Now what's interesting with gold, we have a very rare reversal pattern. And it is called the abandoned baby. It's a bearish abandoned baby. And that is where you get a gap up, you have a gap, which is called an open window. And then you get the next trading session, a gap down, again with an open window, meaning that the shadows don't intertwine. If I were to shoot an arrow through here, it could go through without touching anything. That is a pretty bearish formation. So what's interesting with these ETFs on precious metals is you get a lot of gaps. So if this was not an ETF on commodities, I would say this is highly bearish. Look for a lot of downside movement here because these are highly bearish formations. And again, very exotic. They're very rare. You don't see them very often. But because this is a gappy type vehicle, that's security that's being traded, I'm not going to call that a technically sound abandoned baby. I love seeing them though when I can find them out there in the markets, and they're highly probable. So if you haven't done so yet, gang, one of your last chances to go to groktrade.com and click on Trading Mentor right here and filling out this form. By doing that, we'll make sure that you get an invite to hear more about our mentoring program that we have coming up. We have an online one coming up, and then one in November live in Las Vegas that you might want to join us for. If you like the video, like it. If you understand it, share it, and always subscribe. Catch you guys later.